Welcome to The Explainer. I am absolutely thrilled you're joining us today because we are looking at a setup that is just, honestly, it's fascinating if you follow market dynamics. Today, we're decoding the recent strategic silver forecast and uncovering the exact technical entry points that top analysts are eyeing right now. Okay, let's dive into this and see exactly what the charts are telling us about the future of this precious metal. To make sure we extract every single ounce of value from this analysis, we've got a very clear, logical roadmap. First, we'll examine the bullish silver setup. Then we'll walk through planning the perfect entry. After that, we'll map out our targets and safe zones to build a safety net. And finally, we'll factor in the geopolitical wildcard. All right, Act 1, the bullish silver setup. Let's take a look at the weekly and daily charts. When we step back and look at the broader picture on both those weekly and daily timeframes, a really optimistic narrative starts to emerge for silver. We aren't just looking at random daily noise here. We're seeing a structural, bullish alignment that strongly suggests investors should be actively hunting for buying opportunities in the coming week. The foundation of this market is just showing some incredible strength right now, and this brilliantly illustrates exactly where that strength is coming from. On one side, we have the concept of failed bearish breakouts. Historically, when the price of silver attempted to punch down through established floors, those downward moves completely ran out of gas. They failed to flip into new ceilings of resistance. Instead, what we got were incredibly strong support levels. Every single time the price dipped, that floor held remarkably firm, literally rejecting the downward pressure. So, what does this all mean? Well, it leads us to a crucial market definition: buyer dominance. Because those bearish breakouts totally fizzled out, and because those support levels acted like a giant trampoline, control of the silver market has been handed entirely over to the buyers. The sellers basically exhausted all their energy trying to push the price down, and the buyers just absorbed the whole shebang, taking over the steering wheel. The chart evidence is overwhelmingly pointing to the bulls being completely in charge. Moving into Act 2, planning the perfect entry. Because as we all know, timing is absolutely everything. Seeing a bullish setup is super exciting, right? But true technical analysis requires patience. It demands that we shift from eager observation to cool, calculated action. We have to know exactly where our optimal strike point is. Let's move to scalping and see how this builds our actual trading playbook. This isn't about guesswork at all. It's a systematic three-step approach. Step 1, wait for the price dip. Step 2, target a Fibonacci retracement level, which is essentially our calculated dip. It's that mathematically probable resting point where the price takes a breather before resuming its upward climb. And Step 3, execute the trade confidently right at that calculated strike zone. Now for Act 3, targets and safe zones. Let's talk about how to pragmatically protect your downside. Up until now, we've been riding high, very optimistic. But the smartest analysts are deeply pragmatic. We have to acknowledge that markets can, and absolutely do, behave unexpectedly. So we have to meticulously protect our play from any sudden out-of-the-blue drops in the price of silver. This is where we build our safety net. Now, what's really interesting about this risk-to-reward setup is how it precisely limits our market exposure. We have two core pillars here. First, we establish our profit target. The analyst places this right near a key resistance point, essentially locking in our profits just before the price hits a known ceiling. But crucially, we also have our safe zone. This is a predefined level right below our entry point where we automatically cut our losses if the market suddenly turns against us. By structuring the trade exactly like this, the potential reward is designed to vastly outweigh the strictly kept risk. Finally, Section 4, the geopolitical wildcard. Time to zoom out and look at the unpredictable variables. As perfectly calculated as these weekly and daily charts are, we really have to zoom out for a second. We don't trade in a vacuum. The real world is packed with unpredictable variables, and precious metals like silver are historically highly sensitive to global events, things way outside the confines of pure technical data. The source material heavily emphasizes a critical need to monitor geopolitical news right now, specifically any major updates involving the United States and Iran. These specific developments act as a massive external wildcard. An unexpected event, a sudden shift in foreign policy, or a new diplomatic development has the absolute potential to instantly invalidate that entire technical setup we just mapped out. The charts tell us one very clear story, but sudden global news, that can rewrite the script in seconds. So the crucial point is this. We have a beautifully structured, heavily defended bullish technical setup on one hand, and the unpredictable, heavy hand of global geopolitics on the other. It leaves us with a truly fascinating dynamic to watch in the coming week. Will the calculated mathematical patterns of the charts hold true, or will real-world news ultimately dictate silver's future? Keep your eyes locked on those support levels and definitely keep your alerts on for global headlines. Thank you so much for joining me on this explainer, and I can't wait to dive into the next topic with you.